Yeah.
Let's go next to Express Scripts. This is a company that we've never talked about on this show before. It's a pharmacy benefit management organization. We'll talk a little bit about that in a minute, but it's really about administering the distribution of drugs rather than the frontline retail thereof. Market capitalization sizable though, $40 billion. Price earnings ratio 12.3, not paying a dividend currently. We'll see in a minute why that might be. Let's go to the share chart. It's headquartered in St. Louis in Missouri, and it has been only in fact in business since 1986, listed on the New York stock market in 1992. That's what the 5-year chart looks like. Hits a high of about $90, and it's since sagged quite significantly. There's a reason specifically for that, relates to some legal challenges. But Lance, how do you feel about Express Scripts?
So Express Scripts is an interesting business because it's an intermediary. It's an intermediary between the insurers on the one hand and the pharmaceutical companies on the other. So the insurers contract with Express Scripts to almost outsource their procurement of medicines on their behalf. And so what they meant to do is try to get the best prices possible. Although some people feel it's a conflicted business model because maybe they're not that incentivized to get it. They meant to get a rebate from the price differential that they can really screw down the pharmaceutical companies.
And in that specific regard, a lawsuit against them by Anthem, one of the big US drug companies, was launched in late 2015, alleging that they had kind of not done their best and that they had pocketed some of those rebates for themselves, and therefore they're kind of like the ham in the sandwich here.
That's right. So I think they're in a less attractive space because they're in that very regulated space, and they with that Anthem unfortunate mishap, they had two problems. One is the legal case, but they lost a big customer as well. And so that's a big reason for their share price performance being so poor, is that I think there's the threat of them losing potentially more contracts and more customers.
Because in the US market, we know that there's the government, which has its Medicare and Medicaid programs, as well as the Veterans Health Administration organization. And then there are all these big private health insurers, typically contracted to companies, big corporations. And then if somebody needs ongoing chronic care medication, or if somebody's booked off because of a workman's compensation type thing, or maybe they've got post-traumatic stress disorder as a soldier or something, then they have to get the drugs over a period, and it's exactly there that these contracts exist, and that this company provides that.
Correct. So they've got quite big contract risk because they've got, I don't think that many customers, but they've got large customers.
Numbers of people serviced.
Correct. So they would, if they lose contracts, it's quite a big impact, and then if they win, it works in reverse. But
in theory, a company that's processing 1.4 billion prescriptions and has this whole thing around health decision science and about trying to understand why people take certain medications and how they work and so on, this is an attractive area because, as you mentioned earlier, more and more baby boomers heading into that period in their lives where they've got the money and will live long and will need ongoing medical and pharmaceutical assistance. So it's an attractive arena, but somehow no dividend, presumably because they're sort of saving cash in the event of a potential, settlement claim here. It's difficult to know whether to be positive or not. So
no, they've grown aggressively by acquisition. I mean, as you say, quite recent, but to get to the size, they haven't grown organically. They've mainly grown by acquisition. And typically these aggressive acquirers overpay, where the seller gets the value and the acquirer has ended up overpaying, and it flattens the returns. So also a little bit of concern from my side on that. I think just too ripe a target to be attacked by the marketplace.
So
unfortunately,
in terms of hot or not?
Not hot on this one, unfortunately.
I think I'm going to join you there. I think the threat of the legislation or the what's the regulatory intervention as well as litigation. That's the word I'm trying to find. Right, good. So we're going to go not hot on that one.